a reversal in markets, as we've been talking. Nasdaq is in positive territory right now, Joel. Tesla reported earnings yesterday. It beat expectations on the earnings per share and the revenue. Apple is going to be releasing its fourth quarter tonight after the close. And look at where we are going into the numbers. You think tech remains volatile, right, in the first quarter? But Nasdaq right now up 77. It's still down 13% from the highs, Joel.
Right. So absolutely, it's going to be choppy the next couple of months until we see the Fed scale back completely on the tapering, and we see the interest rates stabilize, which I think is going to happen sometime in March. We're going to see choppy markets. Now, having said that, we've got to remember that tech is able, in some cases, able to expand margins. And I think you're going to hear more. We've heard a lot about PEs. Everybody's talking about PEs or market cap to revenue. A lot of people don't realize the Nasdaq Composite's got a PE of 116, but on the positive, those that have positive earnings, it's much lower. It's about 28, 29. And you've got to remember, we're now going to be looking at growth. Growth is a big thing. So when you think about stocks like Nvidia, they have maybe a PE of around 60. But they have, which is double, 68, double of Microsoft. But the PEG ratio, when you adjust growth, it's much better. And so I think you're going to start seeing these companies, they're able to expand the revenues and they're able to expand the margins because they're bringing costs down. Now, what's interesting, the financials have actually beaten on the top line, but they've reduced on the bottom line because the labor costs are so high. And we're going to see many companies, particularly in tech, doing better because they're able to expand the margins. We think end of the year, they're going to be higher.
It's a great point, and we'll get a look at growth for the macro story today when we get to GDP. Joel Shulman, Francis Newton, Stacey, great to see you both.